if they're going to go for an alternative, they're going to go for gold. And I think that's going to wake humanity up to how important gold is as a monetary asset.
You're watching Silver News Daily. Subscribe for more.
Imagine a world where silver outperforms gold. Sounds impossible, right? Well, Mario Innecco, a trusted voice in the financial world, predicts a massive rally for silver prices that could leave gold in the dust. With silver currently holding steady at just over $1.31, could it really become the best investment of 2024? Stick around, because what you're about to hear might change your entire perspective on where to put your money next.
Oh yeah, it's already doing so, even though gold is going up not just in dollars, but also in euros, British pounds, in Japanese yen. I mean, Japanese yen, we're almost at 400,000 yen per troy ounce. And even in the own BRICS fiat currencies, it's going up. But I saw a report from the Jerusalem Post the other day that Russia has 31.5% of its reserves now in gold, and I think that's going to keep growing. Oh yeah, it will definitely be a problem for the West, for government bond markets, not just U.S. Treasuries, but UK gilts and European government bond markets. These countries, they're not going to, they will not buy as many Western Treasuries and government bonds as they normally would have if they weren't going into a gold-backed system. And that's going to put pressure on bond yields. And we've seen bond yields rise ever since the Fed cut rates on September 18th. It might be a little bit of the market saying the Fed is done too much in terms of cutting the things. Inflation is still pretty strong. But I think it's also to do with the fact that there will be a lot less demand for our paper, which, as you know, is you can't pay off fiat currency. The only way to retire fiat currency is to issue more and more debt. In a gold-backed system, they'll be able to settle trade, extinguish debt with gold. That's what people don't realize, that with gold and silver as well, you can extinguish debt. That's how you pay a debt. Someone comes with a promissory note or a fiat currency, and you give them the gold and silver, and you've settled the debt.
Silver is currently positioned at $31.64, holding above the critical support level of $31.41. Now, why is this so important? Well, as the U.S. Treasury yields continue to fall, and with the 94.1% chance of a 25 basis point rate cut by the Federal Reserve in November, silver's appeal as a safe haven asset is skyrocketing. Investors are looking for alternatives that can hold their value as interest rates drop, and precious metals like silver are back in the spotlight. But here's the twist. It's not just the Fed that's making moves. Central banks across Europe, including the ECB and the Bank of England, are signaling their own rate cuts. This coordinated effort to reduce economic pressure could drive even more demand for silver. With these global developments in motion, could this be the perfect storm for silver to shine about its volatile reputation? If you're intrigued by these trends, make sure to subscribe to stay updated on the latest silver market moves. And let me know, do you think silver could actually maintain its momentum and surpass gold this time around?
Call it, I think, the unit, and it will be 40% gold-backed. That's the plan, and 60% backed by fiat currencies, i.e. if a country has 40% of their reserves in gold, they'll have the other 60 in different currencies. And I think there's a limit to how much you can have of the other currencies. And I think they will announce something. Whether it's going to be up and running very soon is another question. But I've noticed that the trade amongst the BRICS plus countries is less than, I think, 35 or 30% in dollars and euros now. So it's growing, it's moving that way. And the reason they're using gold is because they're not going to use the dollar. And the only thing really that you can trust as a monetary reserve is gold. I mean, people have been fooled for the last 50 years into thinking that dollars and U.S. treasuries are safe. I think that's the whole problem here, is that people are going to realize they're going to realize the most powerful countries outside the West. Well, if they're going to go for an alternative, they're going to go for gold, and I think that's going to wake humanity up to how important gold is as a monetary asset.
Central banks are playing a pivotal role in shaping the outlook for silver prices. While all eyes are on the Federal Reserve, it's not the only institution influencing the market. In Europe, the ECB is expected to cut its main refinancing rate, following similar signals from the Bank of England and the Reserve Bank of New Zealand. These moves are more than just numbers on a page. They represent a coordinated effort to combat economic pressure globally, and they're making silver more attractive as a hedge against inflation and currency volatility. Now, what does this mean for silver's future? Historically, when central banks shift towards dovish policies, lowering interest rates or implementing stimulus measures, precious metals like silver gain favor because they offer protection in uncertain financial landscapes. But here's a critical insight. As these central banks move towards easing, demand for silver as a safe haven asset could increase significantly. This shift could lead to a bullish trend in silver prices, especially if yields continue to decline and economic conditions remain unstable. However, it's not just about economic numbers. Geopolitical tensions are also at play. Recent conflicts and policy shifts are further driving investors toward tangible assets like silver. The question now is, how will these central bank actions and geopolitical dynamics intersect? Could they push silver beyond its typical volatility and into a sustained uptrend? As you think about these factors, remember to subscribe and stay tuned for more deep dives into how global financial strategies could shape your investment opportunities. Do you believe silver has what it takes to outperform gold in this shifting landscape?
I think definitely the BRICS nations that have been acquiring gold, since 2022, if you remember, 2022 was a record amount of net buying for central banks ever since the Bretton Woods Agreement in the 40s. And last year it was almost the same amount. And it's not just BRICS nations. You've had countries like Poland and other countries that are not in BRICS buying a lot of gold because they see the writing on the wall. I think that people are concerned of leaving their reserves with the U.S. or with Europe. It might be frozen or confiscated. And as I said earlier, Russia, they're up to like 31.5% of their reserves in gold. And it looks like the target is going to be 40. So I think they're going to have to keep buying gold. And don't forget, these reserves always change depending on international trade. So I don't think it's going to stop. And I think eventually countries in the West are going to have to catch up as well. So I don't see any slowing down in the purchasing of gold. But I think the price has been driven more by the central banking sector, the consumer, the retail market in the West is not that strong, even though we're seeing anecdotal evidence, some proof or maybe some stories that show that people are starting to wake up, like they're selling gold at Costco now, and that they're running out of gold. So yeah, I think there's still a lot to see in the gold space, especially on the retail side, not just in North America but also in Europe. And if you add that to the central banking buying that I think is going to continue, yeah, we're just in the beginning, I think.
Now, let's talk about the BRICS nations: Brazil, Russia, India, China, and South Africa, and how their actions are indirectly setting the stage for silver's potential rally. These emerging economic powerhouses are making waves with their proposal for a gold-backed currency, aiming to reduce their reliance on the US dollar. This move could reshape global financial systems. But while gold takes center stage in this strategy, silver isn't being left behind. As these nations accumulate gold to support their currency plans, the demand for gold rises, tightening its availability. This scarcity could shift investor attention to silver, the poor man's gold, as a more accessible and attractive alternative. Historically, when gold prices surge due to increased demand, silver often follows suit, but with even greater price movements due to its smaller market size and higher volatility. This dynamic means that silver could see an explosive upward trend as investors look for alternatives when gold becomes more constrained. Think about this for a moment. As BRICS nations seek to hedge against the dollar, are we seeing the start of a domino effect that could bring silver into a prime position? Could the increasing demand for gold inadvertently trigger a significant rally in silver? If this happens, silver could become the unexpected star of the precious metals market. Make sure you're subscribed for updates, and drop your thoughts in the comments. Do you think the BRICS move could be the catalyst for silver's rise, or will it all be about gold?
Yeah, the Fed, but also fiscally, and if you remember well, when we had lockdown, that was 2020, beginning of 2021, and the Fed printed trillions of dollars, and this was under the Trump administration. And yes, the Biden administration came in and they passed a lot of spending, new spending, but so had the previous administration. We were running an almost 6% budget deficit in 2019 already. Yeah, I agree with you. The Fed is going to determine things because it is a monetary phenomenon. But the debt situation wasn't, the debt went up also a lot under Trump, as it's going up under the Biden administration. And some people that are even pro-Trump, people that I've spoken to, they think that with a lot of tax cuts that Trump is promising, you could see a lot of inflationary pressure unless you see government spending being reined in. And we know that Congress and cutting government spending don't really go hand in hand. Both parties, they seem to always want to spend. And with all the geopolitical situation going on in the world, all the proxy wars, I don't see Congress reining in any spending. And I think Donald Trump, in one of his debates, it might have even been the one with Biden, I'm not too sure, he promised to make everything whole in terms of all the unlimited liabilities that the U.S. government has. So either government, whoever wins, I don't think things are going to slow down in terms of the inflationary pressure. And the underlying reason why I think that, Elijah, is that you can't, you got to keep the fiat currency debt-based system going, because if you slow down, everything implodes. So even under Trump, that's going to happen too. So that's the way I see it.
Silver's volatility is often seen as its biggest drawback, but could it actually be a key to its explosive potential? Unlike gold, which is primarily used for investment in jewelry, silver has a wide range of industrial applications, everything from electronics and solar panels to medical devices. This industrial demand means that silver's price isn't just influenced by investor sentiment. It's also tied to broader economic factors, making its price movements more dynamic and, yes, more volatile. But here's where things get interesting. Mario Innecco believes that the growing demand for physical silver particularly from China and India, is creating a scenario where silver could outperform gold despite its volatility. In these countries, silver isn't just seen as a safe haven, it's also a vital industrial resource. As geopolitical tensions rise and global supply chains face disruptions, the physical demand for silver could continue to soar, tightening the market and driving prices higher. Moreover, with central banks' dovish policies likely boosting demand for both precious metals, silver's smaller market size could amplify its price swings even more dramatically. If investor sentiment shifts and physical silver shortages persist, could we witness a silver squeeze that sends prices skyrocketing? What are your thoughts? Does silver's volatility make it too risky? Or is it the very reason it could see unprecedented gains? If you're enjoying these insights, hit the subscribe button to stay in the loop as we continue unraveling the silver market's potential.
Yeah, well, there's a few factors. One of them is geopolitical. In Middle East, that's always like in the background, and it could rear its ugly head in that a bigger conflict there could mean that Iran might stop oil flowing through the Strait of Hormuz. That would make the price of oil go a lot higher. And that would raise prices, and it would be considered inflationary. The other one I would say is the Chinese stimulus, even though a lot of commentators in the West don't think the Chinese have given enough details and that they're not going to do enough. But from what I've seen is the fiscal stimulus has to be rubber stamped by the National People's Congress in China. And that's why they haven't come out with the details. But I think the Chinese are going to be very accommodative, not just monetarily that we've seen already, but also fiscally. So that's going to put a lot of demand underneath the commodities market. And also looking back historically, in the 70s, there were 3 waves of inflation. And it's not far-fetched to think that we're going to see another 3 waves because things always come in cycles. And don't forget, back in the 70s, we had a lot less debt as a percentage of GDP, and now we don't. So, and I think also the Fed and the Treasury, everyone's worried about the economy slowing down. So, we could have some kind of stagflation.
While silver's industrial and physical demand is driving its current momentum, there's another critical factor that could determine its short-term trajectory: upcoming economic indicators from the United States. The market is closely watching reports like retail sales and weekly jobless claims, as these data points will provide crucial insights into the Federal Reserve's next moves. If these reports show signs of economic slowdown, it could solidify the Fed's decision to cut rates further, which in turn would likely boost silver's appeal as a safe haven asset. Why does this matter? Because as the probability of rate cuts rises, yields on bonds continue to decline, making non-yielding assets like silver more attractive to investors looking for stability amidst economic uncertainty. But here's the twist: if these economic reports come in stronger than expected, it could challenge the Fed's dovish stance, causing a ripple effect in the market and potentially slowing down silver's rally. Adding to the complexity, geopolitical tensions remain a constant wild card. For example, any escalation in conflicts or shifts in international trade policies could create sudden market volatility, further enhancing silver's safe haven appeal. The question is, will the U.S. economic data support silver's upward trend? Or could we see a temporary pullback that presents an even better buying opportunity for investors? As these reports and geopolitical events unfold, be sure to subscribe so you'll miss our updates on how silver could react. And tell me, do you think silver has the resilience to hold its ground no matter what the economic data shows, Or are we in for another round of wild price swings?
It's already happening. As I said, we saw the 10-year yield go down to 3.6. Now it's above 4. Last time I checked, it might have moved a little bit. But the only way to solve the problem of a dearth of demand from foreigners is for the Fed to stop QT, which is quantitative tightening, unwinding its balance sheet of U.S. Treasuries, and then resume doing QE. But that in of itself would, put a rocket up the gold and silver price, and it would mean more and more devaluation for the dollar. But they might not have a choice. While we could have also, apart from the Fed, we could see the Fed with the Treasury introduce new rules for pension funds, force them to buy a certain percentage of Treasuries to raise the demand domestically. Who knows? A lot could happen, but in the end of the day, it's going to hurt the dollar.
All the pieces are falling into place for silver's potential to outshine gold in the coming months. With central banks around the globe leaning towards rate cuts, geopolitical tensions driving safe haven demand, and the BRICS nations accumulating gold as they shift away from the dollar, silver is positioned uniquely. The industrial demand, especially from countries like China and India, is amplifying this setup, creating a perfect storm for silver to break out beyond its traditional volatility. But here's the crux. Mario Innecco's forecast suggests that if these dynamics persist and physical silver shortages intensify, we could see a sustained rally pushing silver prices beyond what we've seen in recent years. If silver breaks through key resistance levels like $32.50 or $33, it could signal the start of a significant uptrend that might just outperform gold, as the smaller market size of silver makes it more susceptible to rapid price gains when demand spikes. The truth is, while silver may be volatile, that very volatility could be what propels it to new heights in 2024. So, is silver the best investment opportunity in the precious metals market right now? Based on Mario's insights and the broader economic picture, it just might be. If you're excited about silver's potential and want to stay informed, make sure to subscribe. And remember, while this analysis shows promising possibilities, it's not financial advice. Always do your own research before making investment decisions. Let's watch closely as silver's next big move unfolds.